Hi, this is Tom Nunemaker with Aeromir Corporation. So this is the Goldilocks Performance Tracker. It's a Google Sheet. If you go to aeromir.com/Goldilocks Performance, you'll see it. And you can see we're in a bit of a drawdown. So I was thinking, Joe Ross was a friend of mine from Trading Educators. He unfortunately passed away a few years ago. He's a good friend, but he had a really nice technique. He'd been trading most of his life. His father was a trader. It was in his blood. But one thing that he always did is any system that he was trading, he would track the performance by tracking the equity, and then he put a moving average on the equity. And if the equity fell below the moving average, he went to sim or stopped trading it, and then waited until the equity got back above, and they would start trading it again. So with that in mind, I added this moving average concept to this performance page. So if you click here on this checkbox, now we're using the moving average, and we are below the moving average, and it says trade simulated or trade sim. So if this number gets above the moving average, say it's a 25 or bigger number, now it's going to say trade live. I'm going to undo that because that's not the right number. So with a 20-day moving average, we are at 2381. Joe always used the 30, but I don't have 30 days of data. So I think we have to go about 26, maybe. That's where the moving average just starts. So our 26-day moving average is at 2,000. So we're about $700, a little bit more underwater. However, Goldilocks can and has a $1,000 winning trade. So we could easily pop back up above this. So there's two schools of thought. If you look at the performance of Goldilocks for the last year, the maximum drawdown is about 2,000, 2,100, something like that, which we're still below. We're only at a $1,700 drawdown right now. So we could easily have a couple of green days or green trades and start cutting back on that drawdown and start getting back above this moving average. However, if you like the concept of the moving average, I'll make this a little bit smaller so you can see it. So here's a 20-day moving average. So as long as your equity is below that, either stop trading live or cut the number of contracts in half. Goldilocks trades 2 contracts, so just trade 1. So that's something you can do. Now, for our official tracking, we're not going to use this, but for your own trading, if you want to use this as a risk management tool, it's very, very good. So again, 25 periods, probably nice. Joe always used the 30 period. So a 25 is about 2165, so about $800 away. So it's here for you to use. It's a nice tool to help control risk. If we are entering a bad down period, worse than normal, then this will kind of keep you out of trouble. Now, another tool that I have is the, let me show this to you. It's the consecutive loss probability calculator. So let me get back here. So that's at aeromir.com. You just go to tools, consecutive loss probabilities. You don't have to be logged in to see this. So right now we're about 55.5. You can put that in exactly. So we've had 6 losses in a row. If you look at the trades tab down here, so there's your 6 losses. But if we go back here, what are the odds of that? So it's about 1 in 130. Well, there's 250 trading days roughly in a year. So actually we could have 7 losses in a row, and that should happen about once every year and a couple of months, maybe every 15 months. But this should happen 6 losses in a row, maybe once or twice, probably twice a year. So it's not unusual with a 55% win rate. It's on the lower side. But you do have winning strategies that have win rates in the 40%, so they can have lots of consecutive losers. So this is still within the parameters of the back testing that we've done. It's just a little pain we have to go through right now. But we do have this new tool to help decide how we want to trade it. If we want to use this, and if there's 2 schools of thought, we can cut the risk down, and if it keeps going down, then we're sim, or maybe half the contracts, or losses are slower. But then once it does pop back above, then it's working better. and start going live. Or you can just say, you know what, if the next trade's a winner, I want to get all of it. And, just that's how we back tested it and have been live trading it. We don't modify our trades based on the moving average. For one thing, we didn't have the data yet. Now we do, but we're going to still just trade it just like the back test, which we're kind of forward testing and validating too. But for your own trades, if you want to mitigate some of the risk, you can use this moving average concept, which is an excellent idea from Joe. All right, everyone. Thanks a lot. And again, if you have any questions, you can go to aeromir.com/Goldilocks, and it shows the current equity charts and all that. See the moving averages in there now. And you can always go back to this Google Sheet from here. And if you're not a subscriber, you can subscribe, $125 a month or $12.50 a year. But the strategy developer is working on something to try and improve the results. Right now, the way it works is it's a trend following system, and it waits for a pullback and then enters in the direction of the trend. But if the pullback is too deep, then he's going to make some new adjustments to it to see if it's going to help improve the results. So Bud works on this stuff all the time, and it's only going to get better. But right now the results are pretty good. Over a year, $2,100 drawdown with about $20,000 of profit. So it's a really, really high reward to risk ratio. All right, so that's it. Enjoy. Let me know if you have any questions, and have a great day.